everyone, welcome back to Navalier Market Buzz, episode 29. I'm Crystal Navalier, and I'm joined again this week with my father, Louis Navalier. So, Dad, let's first off talking about China. Can you explain to our viewers why China now has a deflation?
It's a variety of reasons. Their interest rates have been declining for some time, but they overproduce. They overproduce batteries, solar panels, EVs. They're trying to crack the TV market via a company called TCL. They'll probably be outproducing those soon. And they like to overproduce, wipe out their competition, and then dump their goods. But the other problem is they are shrinking in population. They're losing millions of people each year. They have shrinking households. The average person in China invested heavily in real estate. China, unfortunately, has ghost towns, ghost tower condominiums, and all. As any society gets older, it's hard to grow. The last comment I have is President Xi is an authoritarian fellow. He had a bunch of reformers that were helping China, be more capitalistic and grow and be part of the world community. He got rid of all those people. So he's very authoritarian, and it's very hard to figure out exactly what's going on in China. So they are, from what we can tell, the new Japan. Their 30-year bond yields fell below Japan's long-term bond yields not that long ago. We expect them to be at or near zero to negative interest rates for 20 plus years. Again, all driven by demographics. Okay. And when you look at Asia, you would think that, Indonesia, Malaysia, Vietnam would have the highest birth rates, but it's actually Japan. So all of Asia is shrinking. Okay. And it's the deflation is real, and we will be importing that deflation, and that's why I think the 10% tariff, the 10% new tariffs on China, we will not see at all.
Now, there are some market strategists that are now cutting their price targets for the S&P 500. Can you explain what's going on?
Sure. Obviously the S&P went into correction. It bounced. It's trying to retest its lows. What's essentially going on is they're just adjusting their price targets. That's all. There have been some warnings from airlines about things slowing down. There have been some warnings from some retailers that consumers are fickle. But from what I can tell, what we call the bottom-up analysts, the companies that actually cover the companies, things just still look fine. It's the top-down strategists that pretend they're an expert in everything when they're really an expert in nothing. Those are cutting estimates. So we're going to be okay. Okay.
Now, why does the stock market like to retest its lows?
It's just human nature. The market is a manic crowd. And basically a sell-off is panic selling. So everybody's running for the door at the same time. No one's thinking, they're just reacting. And then after we run out of the door, it says, well, did we do the right thing? And then there's some buying. And then after we bounce, then it likes to pull back and make sure the low is really the low. The key on any retest is for the volume to dry up. Now, we can have several retests, okay? But usually we just need one on light volume. But we are retesting late this week, and I'm not worried about it. It's perfectly normal. I had some very wise clients ask me to invest some cash they had in the middle of the week when the market looked pretty dire, and I didn't. I talked them out of it because I was waiting for the retest. So I think Nvidia's AI conference next week will help lift the market. We do have an important retail sales report on Monday, so we just got to look at the data. The inflation news this week was phenomenal. CPI was lower than expected. PPI was flat, and the core rate, excluding food and energy, was negative. And so clearly things are cooling off. And again, this is all due to a strong dollar. We're not going to have inflation. There are people worried about stagflation, which is an anemic economy with inflation they are not going to have that problem.
Now, moving on to stocks, can you talk about what's happening with Nvidia?
Sure, Nvidia bounced. It's holding up relatively well. Their developers conference next week is very exciting. You're showing a revenue chart of Nvidia and a earnings chart from our friends at Bespoke, and they have a little arrow there that when Chat GPT came out and what Nvidia has been doing since. So the AI race is real. Uh, Anyone who uses Chat GPT or artificial intelligence is sucking a lot of power from the data centers and all. And of course, we have to double our power grid in America, and this data center expansion is real. Of course, there was this, as we've discussed in previous Market Buzz episodes, there was the DeepSeek incident, which frankly looks more like a plant from the Chinese Communist Party. It's Jason Bodner referred to it, and that DeepSeek has been the number one seller on the Apple Store, but it's not working very well. It's crashing a lot. It seems to have some cybersecurity problems. So I'm not too worried about it.
The US LNG capacity just surged. Why was that?
Well, we opened up a new terminal. There had been a ban since January of 2024 on adding new LNG terminals. And there was Biden administration. It was overturned by the Fifth Circuit after 16 states sued. The Biden administration was appealing, but it's all over now. Trump's going to allow LNG to expand. He wants the U.S. to dominate it. It's interesting. Europe has spent more on Russian LNG than they have on aiding Ukraine in the war. So, and obviously the U.S. wants to replace that Russian LNG with our LNG. So, it's fascinating times we're in, and but we are the Saudi Arabian natural gas, and it's been cold this winter, and it's been cold in Europe. So natural gas prices are abnormally high.
So, what are your favorite stocks that are benefiting from this LG boom?
Yeah, that's a good comment. It's mostly what we call master limited partnerships. Um, these are the ones we recommend in our elite dividend list on Growth Investor. That's our biggest newsletter. But things like HES, that's HESM. Please excuse me, I'm better with symbols than I am with names. MPLX is another one. PAGP and WES. Those are all midstream pipeline plays that will benefit from the LNG boom. I have had LNG tanker stocks in the past. I will probably add some back, but right now I'm playing the midstream and the pipeline companies. Obviously, oil prices are at a 3-year low because of drill baby drill and weak economies around the world. Oil normally does pick up in the spring, but the main beneficiary of Trump getting elected is natural gas, and you can play that with pipelines and midstream companies.
Retail sales are being announced on Monday. What do you expect?
I do expect them to be okay. I mean, I want to look at the categories. I think the weather has disrupted them in the past. I know one month that was not very good. Everybody was still out and about at bars and restaurants. So that means consumers have disposable income if they're out and about drinking and going to restaurants. So we shall see. But I want to see the categories really improve. We keep talking about there's two types of consumers. There's the boomers, the people with homes and stock portfolios. Those people are spending up a storm. And then there's people in your camp under 30 that are struggling to make ends meet. And so we really do. Right now I cater to mostly affluent retailers because their spending is more consistent. But we hope that overall consumer spending picks up, and I do expect to pick up in the spring. So I'm expecting a positive report, but I would like it if 10 of the 13 categories are up, and I'm not sure I'll get that. So I'll get 7 or 8 categories up. We shall see.
Can you share what some of your favorite retailers are?
Yeah, the safe ones are Costco. Costco did miss on earnings by 2.1%. but their sales were stunning. Their same-store sales are even more impressive. Costco's a major gas retailer, and their still same-store sales growth is well over 7%. We love Sprouts Farmers Markets. They're expanding nationwide. That's obviously a safe play. You profit from high food prices. And then Walmart, WMT. Walmart is increasingly catering to more middle and upper income people that are literally going in there to shop for groceries. And then their online delivery services are very good. And Costco, again, caters to very affluent households. Just look at all the vehicles in the average Costco parking lot, and they're pretty darn nice. So again, Costco, Sprouts Farmers Market, and Walmart, all are benefiting from catering to more affluent customers.
And what do you expect from the FOMC and the dot plot on Wednesday?
Sure. The FOMC, of course, is the Federal Open Market Committee, and they are going to have an announcement, and we expect it to be super dovish. The Bank of Canada cut this week. The European Central Bank has cut twice. So we're very excited about that. And so they are going to have to be cutting because market rates have come down. The dot plot will tell us the survey of all the FOMC members, and will probably show the consensus of being 2 rate cuts, but there will be a fringe minority of up to 3 rate cuts. I'm still in the camp of 4, but I'm expecting a global interest rate collapse. And again, the reason I'm so adamant about that is the only countries that are growing in the world in population are the US, Brazil, and India. And Brazil is going to stop growing soon. So all these other countries, I'll name them, Canada, Mexico, Britain, France, Germany, they're all in recession. Okay. And they don't have household formation. And so what's happening is it's really hard to grow your economy when you're not creating new households. So that is a big deal. And the inflation we've had in America is all real estate related because we need more households. And now we're cooling off, they're cutting home prices and stuff. I'm sorry that Bloomberg had an article that rents in New York are still going higher. So you happen to be in a bubble market, but everywhere else market prices are soft.
And finally, I'd like to end on subscriber questions. What are your thoughts on CLS and Sezle?
Both have stunning forecasted sales and earnings. I'm very comfortable with them. Sezle does cater to people that are struggling. Gives them loan payment plans, but their sales and earnings growth is ridiculous. This is an explosive stock, a very volatile stock. And CLS is Celestica is more of a medium risk stock, but both of them hit my criteria fine. So it's very hard for me to explain this to people, but it's probably a good thing to close on. I am obsessed with my fundamentals. Okay. And as long as I've had a good earnings announcement season, as long as the analysts aren't cutting the estimates, as long as the companies are largely guiding higher at margin expansion, I don't panic. Okay. Now, if I see any sign of weakness, like an analyst cut or margins starting to come under pressure, I'll go in and I'll fine tune the portfolio. And I have sold some stocks recently, and I've sold stocks that have gone higher. Okay. So because and had good results because I'm just selling something good to buy something better. So the way we grade stocks, and we have this 8-factor fundamental model, is absolutely imperative right now. And that 8-factor fundamental model, which is online available to you guys free, is sales growth, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, analyst earnings revisions, and earnings surprises. And the stocks that score the highest in that model are doing good. We just retested it. The top 45%, which are the predominantly the A and B rated stocks, look wonderful. So that's why I ride through all the ups and downs and don't worry about daily gyrations. I don't want to worry about all the tariff gossip, that's distracting the market right now. But it's It's not affecting my stocks.
Another one of our subscribers wanted to know if ZEVIA is going to go up in the next 4 to 5 years.
Uh, the longer you look, the fuzzier it gets. But I'll tell you, near term, their sales are forecasted to decline 4.2%. The operating earnings are only supposed to be up 2.5%. The analysts have actually cut their earnings estimates from -7 90 days ago to -10 cents. And they did miss last quarter. It wasn't a big miss, but they missed. So this stock is dead in the water until they have positive sales, positive earnings, positive analyst revisions, and real absolute earnings growth. So I don't mean to be a buzzkill, but ZVIA doesn't hit my criteria at all.
And finally, what is your opinion on attaching a stop loss to each stock purchased as a safety?
Well, that's an outstanding question. It's very hard for me to explain this, but if you put a physical stop order in, the specialist will probably run the stock down and clean you out, and then the stock will go back up. So if you do a stop, you should do a mental stop, not a physical stop. But I don't like to do that because we have these things called flash crashes on Wall Street. They don't happen every year, but when they happen, they can wipe you out. The last really bad one was in August of 2015. Just so you know, there were some circuit breakers that hit and stocks didn't open, but they let the ETFs trade even though they couldn't price the stocks. So big, safe ETFs like DVY, which is iShares Dividend ETF, fell 34.95% that morning and stayed there for a couple hours. And at the end of the day, it was unchanged. So if you had a physical stop order in, okay, they would have blown through your order. Let's say you had a 10% stop. You would have gotten out at a 35% loss. At the end of the day, you would have been unchanged. So I do not like physical stop orders, okay? And I do like to tell people that markets are illiquid. And after earnings season, we have mean reversion. So what I do is I buy in dips, I sell in the strengths. I did have some clients that were slightly stressed when the market was going down this week. And I said, I'll get you out, but I just want you to know I might have a 6% spread in the middle of the day. Towards the close, I'll probably only have a 3% spread. So people have to realize stocks have spreads. And I think it makes a lot more sense to sell good stocks into bounces and then buy in dips. This oscillation we get in the market is perfectly normal. And it's been around for a long time and it will continue for a long time. So stop losses are not my thing. I'm actually doing the opposite of what most people are doing. With that said, I do respect the Investors Business Daily. I know they've recommended stops in the past, but I do like their research. And I agree with pretty much everything they do except for stops.
Well, thank you so much for answering all my questions. And thank you to you all again for liking, commenting, and subscribing. We really appreciate your viewership. Also, thank you so much again for all your support on Louie's new book. If you do want to purchase it, it will be in the description below. But until then, we will see you all next week for a new video. Thank you.